There it is. All right, man. I for whatever reason, and hold on. There we go. For whatever reason, I can never get the music to fade out. It's like I try to fade it out, and it just stops. It's fine. How are you gentlemen doing today? What did you call me earlier, Dwight?
El Jefe Grande.
Oh, okay.
Yeah.
That's not what I remember you saying.
I don't want to get us banned on Facebook.
Well, I don't think Facebook speaks Spanish.
Really?
My Facebook, my Facebook definitely speaks Spanish. That's for damn sure. What's going on there, little Willie?
Hey, man, how you doing? Yeah, a lot of times I'll see your post and I have to hit the translation button to figure out what you're trying to say there. So
I'm just a poor black Mexican trying to make a living.
In this, that's when he's speaking English, right?
Yeah.
Yeah, it is.
We what we need to do is we need to do this podcast in Spanish, so that you guys are just going to be talking Spanish the entire time. And nobody will understand anything you're saying, but at least it'll be very entertaining.
You just celebrated a birthday over the weekend, so you're another year around the sun. So happy birthday to you, Raul. And
thanks, man.
Then we found out Dwight's got a same anniversary date. So I mean, St. Patrick's Day will never be the same. Now we've got all this stuff going on. So
hold on, your anniversary is on St. Patrick's Day, Dwight?
Yeah, St. Patrick's Day.
Oh man, I didn't even know that.
Yeah. Well, it's on your birthday, and we planned it that way on purpose.
Got it. Before we even met, you
right.
The greatest man on earth is going to be born on this day.
Yep.
And therefore, this is the day that we need to get married. That's what you said.
Yeah, because actually, we didn't know when you're going to be born at that point. We've been married so long, you weren't even born.
Because didn't you just apply for Medicare like last week?
Yeah, I'm in that seven month lead up to 65. Yeah.
Got it. Good for you, man.
Yeah.
I can definitely I have some agents that can help you with your Medicare Advantage plan. Well,
we need to talk.
No, what? We need to talk? Yeah.
Yeah, we need to talk to him.
All right. What are we talking about today? You guys take lead because I'm actually still working because this has just been one very long, exhausting day. So what are we talking about today, Willie?
Today we're going to be talking about how to pay your kids through your business to get tax deductions. And the reason that this topic comes up a good bit is that we've discovered that people, business owners may be paying their kids through their business, but they don't necessarily know the proper way to pay them or what entity should be used to pay the kids. So we're going to be talking about all of that tonight, how to maximize those tax deductions without creating additional taxes that you don't necessarily have to pay by having the proper setup. But one of the great benefits of being able to pay your kids is that when they do activities or things like that, that money can then be used to pay for that stuff. So that allows expenses that may not have been tax deductible before to become deductible when it's routed through the kids, and also teach them a little responsibility. Let them be around you at your business. Just kind of see what we do from day to day. I know my daughter likes to come to work with me on the weekends, so we can help her. She can see how we put client folders together. Just little things along the way. But spending time with dad and getting some tax deductions is a good thing. So yeah, that's what we're going to be covering tonight, and I'm sure Dwight's got some thoughts on that as well.
Well, and what sparked the topic was over the weekend that Facebook post that I saw and I shared with you guys. There's just so much misinformation from CPAs and tax professionals. So people that are in the industry don't even know how to do this properly. So if they don't know how to do it, then they're not going to tell their clients the right way to do it. And ultimately, if you do it the wrong way and you do it like what was suggested in the Facebook post with actually putting your kids on payroll, then you're overpaying in payroll taxes. Or if you decide to pay them a 1099, well, now you're subjecting your kid to self-employment taxes, which is unnecessary. So we just want to clear it up. Also give some examples of the way ourselves, our clients are using their children. I say using, how they are employing their children in their business. So you can have an idea if you're a business owner that you can start using these same duties and same responsibilities for your own kids, and ultimately save you some money through the business, but then also give them some money that they can spend on things that you normally would have to spend personally. You might as well give them the money, get the tax deduction, but then they can go ahead and spend the money themselves.
I have talking about using children. I definitely have a story for you guys of me back in the days when I was in high school. But I'll share that with you guys a little bit towards the end of our podcast. Let's just say, and I'm pretty sure Will would share this sentiment. Let's just say our dads definitely did not take any child labor laws into consideration. Like when we were younger, it's like, you shut the hell up. This is what I want you to do, and then that's just what you would do. Definitely a different era than the one we're living in today. That's for sure.
Yeah, I got a funny story about the about the second car I got toward the end of high school, maybe going into college. My dad brings it home. It looks really nice. He's like, "I got you a new car, son." And I go out there and I'm all excited about this new car, and I drive it around, and it's really nice. And after I do that and we get back home with the car, he says, "Now open up the glove box. The payment book for this car is in the glove box." So it was a gift that I had to pay for it through working. But it taught some responsibility, because that was just the one example that, he said, you can drive, but you're gonna make your own payments on this. You're gonna cover the insurance, and I think some of that helps a child, kind of grow up and learn some responsibility at a young age. And so basically, I've been working since I was 16 when that payment book showed up in the glove box.
Well,
what kind of car was it?
It was a Ford Taurus show car, so it was like a sporty Ford Taurus. 1993 model. It was bright red. For the times, it was a nice car to be driving around in. But a few years later, it broke down on the connector in Atlanta, and the police had to come and push me over from the far left lane all the way across 6 lanes, and that was the end of the Ford Taurus show. I never did trust a car again.
Well, I'll share with you mine since you shared yours. So we live, and guys, we promise we're gonna get into the tax savings here real soon. But I do want to share with you this story real quick. When I was right around the same age, I say about 16, 15, 16, give or take. We lived out on a ranch, and if anybody has ever lived out on a ranch, you don't have like a sewer system like you do when you live in the city, right? You have what are called septic tanks. I don't know if you, I mean, both of you guys are city boys, so I don't know if you guys are familiar with what
I'm in the
septic.
country. I'm
Yeah,
on
that's
septic.
right. Yeah, okay.
Yeah.
So
Yeah.
so if you don't know what a septic tank is, but I would imagine most people would, I would hope so. They're these big like containers underground where all of the waste from your bathroom goes to, and it goes through this filtration system into your grass, because you don't have sewer, so that's where all the waste goes. And every, I don't know, so many years, like probably every like 5 or 10, I don't even know, every so many years you have to clean these septic tanks. And generally what I guess normal people do, not Hispanics like us. Generally, what you do is you hire a company that comes with a big truck and a big pump, and they'll put the hose inside the septic tank, and they'll pump out all the waste into a tank, and they'll take it with them. Not in my family. At least my dad was like, "Well, why are we going to waste money on hiring a company when I have a strapping young man and we have a rope and a couple of buckets that can fix this problem equally as well?" So needless to say, that was a very, very interesting weekend. And that was probably one of the aha moments for me where it's like, you know what? Don't think manual labor is necessarily the profession for me. So that was a very shitty weekend. Pun very much intended. But those a shout out once again to like the old school dads, because even though my dad definitely put me through a lot of situations. He passed in 2016, but he made me the man I am today, and it was through a lot of ass whoopings and through a lot of just some very harsh realities. One of which was cleaning our septic tanks. So that was definitely an experience, guys, for sure.
Well, it's not that expensive to have somebody actually do it.
Shut up, Dwight. Shut up. Yeah, I know. I know. Yeah. Look, man.
And I was amazed when we had to have ours pump that it was so cheap.
You're an asshole, Dwight.
Yeah. What?
And I was like, "Are you sure? Is that it?"
Hey, man, you got to do what you know what. And my dad was actually part of the reason why I would like to say that I'm really good with finances. My dad was very good with his money. Like, he wasn't necessarily an aggressive investor. He wasn't much on taking risk, but he was a saver. And so my dad migrated to the US from Mexico, and my dad was actually, ironically enough, he was an accountant in Mexico. And when he came to the United States, he just worked as, a construction worker, and he did janitorial work. He really didn't like being in an office, but he would file our taxes, and he was very good with numbers. And so a lot of the stuff that I do, you know how they say like you turn into your dad. I mean, like that happens. Like, I really don't like people. I'll take that back. I like people. I don't like stupid people. I don't like lazy people. There's people that just flat out annoy me, and I just really try to stay away from them. And like, I remember like back in the day when I was younger, like I would always ask myself, why does my dad hate everyone? And now I ask myself, why do I hate everyone? And I think it just comes with age, and everybody just eventually turns into their dad, I guess.
Yeah.
I can definitely see that.
Anyways, sorry guys, we kind of digressed there with some stories for you guys. Okay, so you have a business, Willie, and we want to pay our kids. What's step one? What is like the first thing that we have to do?
Well, I think the first thing that we have to do is look at the type of entity that you're doing business in. And one of the things that I see often with business owners, they start out doing business in a certain entity, which most of the time is going to be a sole proprietorship. And then somewhere along the line, their neighbor, their friend says, "I've got this S corp. You need to be an S corp." and they become an S corp, and then they try to keep operating as if they're still a Schedule C sole proprietor and don't understand the differences between the entities. So when it comes to the different entities, there's different payroll regulations that play into it. And so, for instance, if you're an S corp, as the business owner, you get a W-2. When you're a sole proprietor, you don't get a W-2. You just take a draw. So those are two different things. So then in an S corp, everybody that gets paid on that payroll, regardless of age, is required to get a W-2. But the thing is, when you have a child that is under the age of 18, they don't have to get a W-2. They don't have to pay Social Security, Medicare taxes. They're below the age. They're considered exempt from that if you're in the proper entity. And so that's what we have to get business owners to understand, is that you may need multiple entity structures when you're tax planning. And I'll let Dwight talk about how we do that for business owners that might have an S corp, and then how we pay the kids ultimately, because if you're a sole proprietor, you can pay the kids, no problem, no W-2, no 1099. The key is to stay below the standard deduction. But when you're an S corp or any kind of other entity, there's a specific way that we have to use and manage the family business to make sure that the kids don't get subject to a tax that they're already exempt from just because you're paying them out of the wrong entity.
Can you hear me?
We can.
Okay. My connection's not very good. I apologize. So now that we've established whether we're Schedule C or S corp, I think it's also important to establish what duties the children can help out with. And so, William, typically the IRS has recognized from age 7 to 17, falls within that range where we don't have to pay payroll taxes for our own children. What are your thoughts on the youngest? Because people say, oh, well, my 2-year-old can do modeling, or they can, we'll take pictures and do some marketing for the business. What do you think about stuff like that?
Well, we released a video a week or so ago with my daughter in it, and she's age 6.
That was good.
So we were demonstrating how they can work for you. Literally, that video gets released within 30 minutes to an hour. There's over 1,000 views on it. She got more views in that 1 hour than I was getting the whole week. So at this point, she's only 6 years old, but I'm thinking she's got a future here because people seem to enjoy what she had to say on that video. So, in that case, that would be a proper use of somebody that's under age 7. If they have some type of speaking ability or some type of acting skill, so to speak, to promote your business. The key is they got to be doing something that would demonstrate that something that they would be paid for if they were doing that for someone else. And interesting, the child labor laws don't apply to business owners' kids. So that's very key here too, as well. But generally, like you said, we've got case law that says age 7 to 17 is the age bracket for kids to be working in your business. But in my case, we've got older kids, we got younger kids. The younger kids are learning from the older kids. It's a judgment call, but definitely got to get close to that age 7. I think a 1 and 2 year old, unless you've got some type of advertising marketing business, that's a little stretch for me. I feel better if they get a little closer to age 7. So that's kind of my take on it. Depends on the type of business and the kids, but generally for them to be able to understand and do some stuff, they need to be getting close to that age 7.
So yeah. let me backtrack a little bit, just to make sure that everybody understands. Regardless of whether you're running a business through a corporation or you're running a business on an individual level, which, by the way, if you're watching this podcast and you don't know how you're running your business, you're running it probably at an individual level, not through a corporation. Most people that operate as a corporation, that's like an entire process. You have to file 2 tax returns. So when you're running as a corporation. And if you don't know, it's probably because you're not. But what you guys are saying is whether you run your business as just an individual, or you run your business through a corporation. Either which way, you can pay your kids through your business, correct?
That's right. Yeah. Now,
Okay.
depending on how you're structured, you want to pay them differently, because ultimately we're wanting to not have to pay payroll taxes on our own children. That's the goal. And two, we're shifting income away from the business to our kids. Ultimately, for things that we would normally pay out of pocket personally, we're giving them the money because they worked for it, they earned it, and now they get to go spend it on their school clothes, their lunch meals, whatever personal expenses they're going to incur. Volleyball lessons. My daughter had volleyball lessons last night. It's $50 a time when she goes to practice volleyball with her one-on-one coach. So that's money that I've paid her through my business. I'm not paying for volleyball lessons. My daughter is. So I get the tax deduction through my business, pay her, she pays the volleyball coach. So that's just a good way to think about it. But let's go down the path of just that sole proprietor Schedule C, because that's the easiest. And in that case, as long as they're up to 17 years old, you just pay them, whether you write them a check, transfer the money from your account to their account. There does need to be a money trail of the payment being made, just like you would another employee. And then that's really it. I mean, because there's no W-2 to file, there's no 1099 to issue. And as long as you're keeping the money that you're paying them below their standard deduction, which have you heard about the standard deduction this year for 2024 yet, William?
Yeah, it's 14,600.
Yeah. So as long as you're keeping it below that amount, there's no filing requirement for your child. And, to get back to the age that we were talking about, the idea is to find duties and response. I keep saying duties. To give them responsibilities that they can do to maximize that 14,600. And so if you're talking about a 2-year-old, yeah, you might be able to pay them for their appearance on some marketing material, but you're not going to be able to pay them 14,600 over the course of a year. You're really wanting somebody, your child to be able to, find things for them to do to maximize that amount. And that's the key. And then if you go the S corp route, then there's a way to shift that money through a family management company to where you're not having to put them on payroll, you're not having to do the 1099, and then that management company is the one that actually pays the child, and so it bypasses the payroll taxes at that point. So I guess is the simplest way to put it.
So if I understand this correctly, you have a business, and assuming that after you factor in all the expenses for your business, let's say your business is net profitable $70,000. Net means that's what you have left over in terms of income after you factor in expenses. So you have 70 grand, and let's say you have 2 kids and they're between the ages of 7 and 17. So let's say one of your children is 10 and the other one is 8. What you're telling me is as long as I pay them, basically there's a money trail transferred to a bank account under whatever the standard deduction limit is, which the standard deduction limit, basically that's like an allocated expense, like that's a freebie that the government gives you, right? Like they give it, I guess they assume that everyone is going to have XYZ amount of expenses. And so they just put out a number out there. And for 2024, it's like 14,000 and change. So as long as I pay them under that $14,000 mark, and if I do that twice, so now I'm talking about $28,000 that I actually get to reduce off of my business income, give it to my kids for stuff that I was going to have to pay for them anyway. This is exactly what we're talking about, right? Like that's the whole purpose of this.
Exactly.
Beautiful.
Yep. 100%. Yeah. And I guarantee you, at least me, I only have one child that helps me in the business. And I would venture to say that over the course of a year, there's definitely $14,000 worth of expenses that I would normally have to pay for personally for a 16-year-old daughter. So it's just a great way to give them the income. And the other night, she was going out with some friends for dinner. And I was like, hey, you got your money? And she had her money. I didn't pay for dinner. The business technically did, so it's just awesome to do that. Could I share an example, though, of one of our clients that's
Go
doing
ahead,
this?
man. Yes, please.
Because this is great. And of course, we like real estate investing. And so we have a couple, husband and wife, who have a son and daughter, and they flip properties. And so the son and daughter have their own YouTube channel now, and they go and record, after the property is bought and it's still in, crappy condition. The son and daughter go out there and record and kind of do a walkthrough of that property. One of them has the microphone and they're giving you the tour. The other one's, behind the camera. And so they give you a tour of what it looks like. And then they come back about midways through the repair process, and they show you what they've done to it, what still needs to be done. And then at the end, they come back and show you all the repair, the property completely fixed up and ready for sale. And then they advertise, that it is available for sale. So the parents are paying them to do this, and they're like 7 and 8 years old. And so it's cute, right? People watch that kind of stuff. And it's just a great way, because flipping is an active business. It's active income. So it's business, and they're shifting that money away from the business over to their kids in a legitimate way. And you're the finance guy. What else can they do with that money other than just spending it on personal stuff?
Well, where it gets real cool here, guys, is, I mean, you're basically putting your kids on salary, and it's a freebie because that automatically gets deducted from your income, from your business. So imagine if you have 2 children, that's $28,000 worth of income that you reduce from your business that you're paying your kids, $14,000 a pop. Now, really what's happening there, I mean, and in reality, you're just transferring that money to a bank account that maybe you and your child are on, and you're going to continue to use that for expenses, or like Dwight said, if they're a little bit older, maybe they can have some sort of a debit card that has access to that account. However, you can also now go and start funding investments for them through that account, and you can actually explain to them, hey, maybe you've done this for a couple of years and you have like $18,000 or $19,000 in that savings for your kid with money that you paid them through your business. Now you can start maybe funding a Roth IRA, or maybe you can start buying some stocks. One of the real popular concepts that we'll talk about on this podcast in the future is like cash value built up life insurance policies, and all of that, you're funding it through their account, but it all came from money that originally you were going to give to the federal government anyways, right? Because all of that was going to count as taxable income for you that you were going to have to pay taxes on. So it's one of those really neat strategies where not only can you start building a savings for your kids, not only can you lower your taxable income for your business, but at the same time, you can start teaching them about investments and how to manage money. And I think that's probably the biggest value that you get from this, because one of the biggest conversations that I have with clients when we're talking about like some estate planning, like creating wills and trusts and stuff like that, is their biggest concern is that they're scared that their children are not going to have the skill set to manage the money that they leave behind for them. And that really is a legitimate concern. I went to a conference once, and the speaker said that from extreme wealth to extreme from extreme wealth to extreme poverty, it takes 3 generations. Generation number 1 is the grinder that makes the money. Generation number 2 is the kids that didn't earn the money but have a lot of money, but they don't know how to take care of it, so they spend it. And then generation number 3 is the grandkids that are left with nothing because their parents didn't know how to manage the finances. And so this is a great opportunity for parents to start teaching their kids about money, investments, and how to maximize on what money you give them. So to your point, Dwight, there's a lot of things that can be done.
And for 2024, the Roth contribution $7,000. So even if you did maximize the 14,000 that you're paying them, they still have half of that left over, to spend, to not, not be as wise with it as we would be, knowing what we know now, and if I was 15 years old, you tell me to put something in a Roth IRA, I don't know if I'd want to do that either.
Yeah. Well, you know what really pisses me off is my dad was self-employed, and I didn't even get $500 for cleaning those septic tanks. So, yeah.
He needed a better tax strategist in his corner. Didn't he?
Well, he was the tax strategist. So
Okay.
I love my pops. Oh, okay. So I guess let's talk a little bit more about when you actually have a corporation, because when you have a corporation, it's a little bit more difficult to pay your kids than when you're just running as a sole proprietor. And we'll have other conversations, guys, as far as when it makes sense to actually create a corporation for your business, because that's a whole conversation on its own. But assuming that somebody's watching and they actually have a corporation for their business, what are the, like, William, what are the steps that we need to follow for them to be able to put themselves in a scenario where they can pay their kids?
Yeah. So if you're in a corporation, then what we need to do, if those kids are below the age of 18, because keeping in mind, everybody that's working in that corporation is subject to Social Security, Medicare taxes, regardless of age, if they're paid out of that corporation. Whereas children that are under the age of 18 are not subject to Social Security, Medicare. So you're making them subject to it if you put them into the corporation payroll. So what we do is, in that case, is we create what's known as a family management company, and it can be set up as a DBA or an LLC. But ultimately, that family management company, it will manage your family businesses, and most importantly, will manage the children's payroll for that purpose. And so what would happen is there'd be a management agreement between your family management company and your S corporation. And so essentially the S corp would then have a management fee paid over to the family management company. So the S corp gets the deduction there. That money comes into the family management company, and now the family management company will actually pay the children. And when they're paid out of the family management company, those payments to them are not considered subject to Social Security, Medicare tax. And so that's the big key there, is we want to save on those taxes because we're not required to pay them based on their age. And so essentially that family management company then, as a separate entity, operates as a sole proprietorship for the family. So it's reported on Schedule C. The expenses that you take for the children, they're not reported as wages. They're reported as outside services under other expenses on the Schedule C. So that way they're not matching up on a wage line, because you put on the wage line, we're expecting the 941 and W-2s to be issued. So by putting it on outside services, we avoid all of that and keep them below the standard deduction that we've been talking about. And so that would be the proper way to pay your kids once you have a incorporated business, essentially. So you're going to need multiple entities, which a lot of times when we're tax planning for clients, we will set up multiple entities to accomplish things for the family as well as the business.
All right, Dwight, you want to break that down in English?
Yeah, I was getting ready to say that's a very typical analysis, and you can tell William knows what he's talking about.
Oh man, he's extremely smart. Yeah, I on my phone I have a. Let me share with you guys a real quick story, because it's always good to have really smart friends, like these two guys, because they're both a lot smarter than me. Sometimes it's really good, sometimes it's just awful. So the
Better
other
looking too.
Yeah. Well, I could definitely find better looking friends. So the other day we're having this conversation, right? And then these two dudes, because we talk every night just trying to figure out strategies, how we're going to help our clients and stuff. And these two dudes go off on the 45-minute conversation about changing the hour and different time zones. And I guess how Tennessee is not participating in like the time. I don't know, man. It was like 45 minutes of talking about changing the hour. And I was just like, at what point in my life did I go wrong? Where it's a Friday night and this is my option for entertainment. I was just like, good grief. But so anyways, that's why William is able to give such well thought out explanations, because that's just all he does.
All right, so check this out. Hopefully this will, can everybody see it?
Move it a little closer, because it's fading out with well, now you're gone. Whoa.
Hang on. All right, here we go.
There you go.
So we've got our S corp here. Can you see me now?
Yeah.
Can you see me? So you've got your S corp, and if we pay them through our S corp, then we'll have to put them on payroll or issue a 1099. And at that point, we've got self-employment tax, we've got payroll taxes, and as long as they're 17 or younger and they're our kids, there's none of that. You would only pay that on other people's kids if you're hiring them. So you form the family management company, and then this family management company basically sends an invoice over to the S corp. Say, hey, these kids worked XYZ, you owe them this amount. The S corp then sends the payment for that invoice over to the family management company. And then the family management company sends the money to the kids. And that can be either through check or just a transfer on the bank account, or transfer on online banking.
So is the family management company an LLC?
It can be. So it depends. It doesn't necessarily need to be. You do need to get an EIN for the family management company. Some people, when they try to, because also one thing to point out is this family management company needs its own bank account, because the funds from the S corp needs to go to the family management company's bank account. And what some clients run into is when they go to get this bank account with their EIN, the bank tells them that they also need to be registered with the state. And that would mean having to get a LLC registered with the Secretary of State. So it's not necessarily required for what we're trying to do. It just may be, in order to set up that bank account for your family management company, the bank may require it. Does that make sense?
Right, because it could just be like a DBA with an EIN number. Basically, it just has to be a bank account for the family management company. There has to be some sort of tax identification number for that, correct?
I lost you. I'm sorry. My connection must not be very good.
No worries. I was just saying it doesn't have to be an LLC. It could just be a DBA, like a doing business as, and then just with its own tax identification number.
It doesn't even need to be a DBA. It could just be it could be Gomez Family Management Company.
But it does have to have its own tax identification number.
Yeah, its own EIN. That's right.
Okay. And for those of you guys that don't know what an EIN is, generally when somebody opens a business or an LLC, you will apply for basically a tax identification number for that particular entity. And so usually when you open an LLC, your LLC will have its own tax identification number. That's the same thing that we're doing here, right? You're just creating a tax identification number and then going and opening a bank account so that your corporation can transfer the money to the bank account for your family management company, which really is just an entity that you created for the purpose of paying your kids. So can you deploy the money? Like, let's say if you were going to pay your kids the 14 grand from the bank account that's owned by the family management company, can you just deploy straight into an asset, like straight into like a life insurance policy or a Roth IRA, or does it have to go to yet another account at that point?
I would recommend having it go to the child's bank account first, because that's your proper money trail on it. Because think about it like another employee, even though it's your child. You would go ahead and send the money to that employee. So it'd be the same thing with your own children.
Understood.
Now the question would be, from the child's account, can it go into that investment? It may or may not. And at that point, you could just take it out of their account, put it in your account, and then make that investment for them.
So that was the next question. So all we need is just a paper trail going from the corp. And mind you, it only gets this complicated when you are filing when your business runs as a corporation. From the corporation, we send the money to the bank account of the family management company. Once again, the family management company is basically just an entity that you created with its own tax identification number so that you can open a bank account. From the family management company, it now flows to a bank account of your child. And then from there, you could take it out, write a check, send it somewhere else, whatever you want to do.
100%.
Very good. And when you don't run as a corporation, you can just pay him directly.
Yeah. Yeah. No need for a family management company. It's a lot simpler.
Got it. So kind of food for thought there, and then I'll turn it over to William. There's for a lot of people that ask, does it make sense for me to turn my business into a corporation? In a lot of scenarios, it does, because you can actually save a lot of money in taxes when you turn into a corporation. But keep in mind that when you turn things into a corporation, when you turn a business into a corporation, you're adding a whole nother level of complexity, because this is just one thing. There's a lot of other things that get a lot more complicated when you turn into an S corp. So you just have to be mindful of that. All right, William, thoughts?
Yeah, that's a good point, and that's why when we get potential new clients and look at their entity structures and how things are going, you can't just put everybody into an S corp and say that's going to be the be all end all. And it's different for each state that the client lives in as well. Because in Tennessee, for instance, Dwight and I have this discussion a lot of times. It doesn't make sense for some clients to be an S corp because the S corp gets taxed and the sole proprietorship essentially does not in Tennessee. So those are various factors, but you have to look at if you've got kids in that age range that can save you some significant money on your taxes. You have to look at the business overall, and certainly the S corp does have a lot of benefits for you, but the sole proprietorship Schedule C business could still work for you in the right situation, especially if you were able to take advantage of paying 2 or 3 kids easily out of the Schedule C part of your business.
So assuming that like you have a lot of kids that fall between the ages of 7 and 17, like let's say you have 5,
right?
At what point do you say, maybe paying all 5 $14,000 a year might be a bit of a stretch? What's y'all's gauge on that?
Well, the interesting thing is, you have to look at overall what they're doing, but if they're all working and you feel like that you can pay them, then that's a significant tax advantage. And then also those kids, if they're under the age of 17, they still will qualify you for the child tax credit. So I do have a client that has 4 kids that are all in that age group. So from his self-employed ventures, he pays the kids. That brings down his self-employment taxes and everything else. And then on top of that, he still benefits from taking the child tax credit. So in his case, when we looked at his taxes, it didn't make sense to convert him from a Schedule C to an S corp because we were already getting most of the tax savings with the tax credits and paying the kids on the Schedule C. So why complicate your life if you don't necessarily need to in his business? And there wasn't a big threat of lawsuits and things like that for him. So, it just made sense to keep his life simple. And that's a topic we've talked about before. Like, there's no need to complicate your business if you don't really need to get complicated on it.
Got it.
That's a really good point, William. And I hope the people that are watching catch that, because that is true high level tax planning. And that's details that we look at as opposed to a regular tax preparer probably not even catching on to that. Because married filing jointly, that child tax credit starts to phase out, and it completely is eliminated at like 480,000, I think, for 2024. So if his income is nearing that threshold to pay his kids, then 14 grand a piece, and that's going to drop him back to where he qualifies then for the child tax credit. It's just genius. And unfortunately, if you're working with a tax preparer that's just there to prepare your taxes, they're not going to be able to advise you and think about the way the tax system actually works. And you're ultimately going to end up overpaying in taxes. So excellent point. I hope people caught on to that.
Well, so you can get the child tax credit and you can pay your kids, which you're playing both ends to the middle. But so let's break this down. Like, assuming that, like, say your business nets you like $250,000 a year, right? Like that's your take home from your business. And let's say you have 3 kids, and we can justify paying each of them 14 grand. 14 times 3 is $42,000 that you can pay your children. Somebody who makes $200,000 a year would probably fall under what? Maybe like a 24% tax bracket, William?
Yeah, that's the bracket that they would end up in. Yeah. So roughly we'll just call it average of 22%.
Okay. So you multiply 42,000 times 22%, and just following that money trail from either your corporation or your business to a family management company, and then your children, or directly to your children, saves you $9,200 in taxes by just using the same money that you were going to pay your kids anyways, just following the proper paper trail. That's 9 grand. That's 9 grand that you don't have to pay the IRS just by getting a little creative. I think that's a big freaking deal.
Yeah, because of that tax savings that you're talking about, that 9 grand, that can almost fund that business owner's retirement. Let's say if they want to put $10,000, $15,000, whatever it is, in their own retirement plan. Well, they just found the money just in that one strategy, not to mention the other strategies that we're going to have. So that's the thing. So then it really starts kind of a snowball effect. We save the money there. We identify some improved cash flow, and then we can apply some other strategies because now we have the money to fund them. And that's when these tax things, I mean, I know you call me a nerd a lot of times, Raul, but this is when it gets really exciting, is when you can take and break down something like that. And you have a client that came in, they were paying several thousands of dollars in taxes and have to make those quarterly estimated tax payments that they hated. And that's the thing about a self-employed person. They actually feel the pain of paying those taxes because they're the ones writing the checks for them. And so when you've been told that that's the way it is, that you just got to keep writing these checks and you got to pay every quarter, and just because you made money and they're not getting this help where, like I said, we can show them how to employ the kids, various other strategies where they don't have to send all that money out. And all of a sudden it's just a good feeling as a professional to be able to help them navigate the tax law to their advantage and really benefit their family as well.
Brother Willie's preaching it tonight.
Take it home, Willie. Take it home.
Preach it.
Well, and I know you brought up the time zones, but we have clients in the state of Arizona, right? And Arizona did not spring forward. So now Arizona is 3 hours behind us. So all of a sudden, that 11 a.m. meeting that I have with Arizona clients, it's now 8 o'clock in the morning. So some of them have messaged, can we move that meeting back? So it does, it does play a factor, and that the fact that Arizona does not spring forward. They said, we're not doing that crap anymore.
That's funny.
Well, because like there's, I guess it is somewhat important, right? Like if you live in New York and somebody lives in like Arizona or California, what's the time difference there? Is it like 4 hours, 4 or 5 hours?
So you don't even know, Raul. So we need to teach you here.
No, you don't have to teach me anything.
Yeah.
I just want the answer. My
question would be, if you're living in New York, why the hell are you living in New York? You need to move somewhere better.
Or California for that matter. Yeah.
Or California. You know, Florida. Don't move to Tennessee. Florida would be a good option.
Like you don't want them in Tennessee?
No, we've got enough.
No, man, Nashville was a fun place to go. Now it's really crowded. Traffic's terrible there. So much so that Dwight says he doesn't even want to go near Nashville, and he lives close to it. But anyway, Raul, it's 3 hours coast to coast. But some states in between New York and California decided years ago that they were not going to adjust their clocks. And so Arizona being one is now 3 hours. But then when we fall back, they'll be back to 2 hours. So it's just And that's what Dwight was concerned about. It. And that's what got the discussion was if Tennessee did that, how would we know what time it was for each, because we already get confused because I'm an hour ahead of y'all every day anyway. So I'm telling you something to meet me at 10 o'clock and you're like, it's 9 o'clock here. So.
And now we're all smarter.
I guess it is. I guess it is.
Right. Yeah, I'm more committed because y'all set this thing up at 7:30 because it benefited you guys, but it's actually 8:30 at night. It's like would be near bedtime, but we don't do bedtimes at our house, so it's okay.
Well, in your house, you told me as long as people wake up by 7. No, you said, well, in my house, as long as everybody wakes up at 7, we're good. That's what you said.
Yeah. We have a wake up time because the wake up time is the most important time. That's when you got to get going for the day. So as long as everybody can wake up at 7 o'clock, we're good. And that's how I was able to watch Monday Night Football growing up.
How is it that I'm the youngest one out of the bunch and I'm always the one that goes to sleep first?
I'm trying to figure that out because you're like, I got to go to bed, and I'm like, it's not even that late. And then I realize you're an hour behind me. I'm like, man, it's really early for you,
dude. By 9:30, but I do wait. I wake up between 4:30 and 5. That's when I wake up. So
maybe it's because you work harder than we do.
That is 100% a fact. Yes.
Yeah.
It's it comes with. I was going to say it comes with being Mexican. Yeah. That's probably
the working hard part.
The working hard part, but no, I know a lot of people that are not Mexican that work very, very hard. So let's scratch that one from the record. Yeah. well, can we edit that one? Well, do we have editing capabilities? No, we're live, right?
We need to be on a delay. That way our behind the scenes staff can edit stuff.
That would be cool. Yeah.
But apparently they're taking their own naps tonight. So maybe they'll join us next week.
Maybe so. That'll be fun. All right, guys. Anything else that we want to cover on the family management company or on paying your kids?
I would just recommend, it's a great way to involve your children in your business. Get them to see firsthand what you do to supply the food that comes, hits the table, the roof over their head, the clothes on their back. So you want to find responsibilities and things that fit their age, what they're capable of doing. We've had clients that use their teenage children to help with social media marketing, even bookkeeping. So the older they get, the more involved and the more technical type duties. I said duties again, that they can help with. So just find what they can do. My parents have had businesses throughout the years, and I've always helped them in some capacity. And my dad has a tax office. He taught me how to do taxes, and I'm at the time really wasn't too gung ho on it, but I'm glad he showed me, took the time to teach me, and now 10 years later I've had my own offices. So just find something for your children to do. It's a great way to shift money away from the business that you're going to pay taxes on anyway, and keep it in your family. Your family can do a whole lot better with it than the IRS. I know that for sure.
We need to have an episode on why you don't have to go to college to become a millionaire, because I think the majority of our clients never went to college and they all make a substantially large amount of money. So we not trying to keep people from going to college if you want to go to college, but there's just so many nowadays. There's so many opportunities out there that you don't have to go to college to make a lot of money.
Well, I didn't think about it. I heard this the other day that typical people going to college for 4 years, sometime having to go an extra year, the things that you learned in college the first couple of years may be obsolete by the time you actually do graduate. So it's like, what did you really learn? And all of this stuff that we've learned, the strategies and all that, that's come well after college. So that is a very key point here too, is that there's still a lifetime of studying, but right now the clients just really want to know how can you help them along the way, and that's what we've been able to do. But it's amazing when I look at the client list and things that I work with. We see all kinds of people making money doing various different things that they've just learned how to do and do it at a high level. And that's really been amazing to see that there's not just some certain thing that you've got to do to make money. You find something that you can monetize and do really well at it and really follow your passion, is what we're seeing now with people that are coming in, especially in that 30 to 40-year-old age group. It's really incredible.
Well, my son Willie told me that he wants to do what I do, and I've started to explain to him what it is that I do, and because I mean I'm a tax advisor, but I'm a financial advisor by trade. So I'm thinking that he's going to become a CPA, but he's also going to get securities licensed, and then he's going to put us all out of a job, which I'm perfectly okay with, as long as he pays us some sort of royalties. I'm fine with that. But I think that'll be the perfect mix there, and he doesn't have to go to college for that. Just has to get some. Well, actually, no, he does have to go to college to become a CPA, right? You need a bachelor's and a master's in accounting.
Yeah, you've got to go to college for the CPA. But to our point, yeah, there's certain things you've got to go to college for to get, but that's just the formality to get the license. Everything else he's going to learn is going to be real world stuff.
Well, I guess he is going to have to go to college. Okay, we'll figure that out.
Better start saving.
Yeah, you'll just put him on your payroll there, and
yeah, he can pay for it himself. That'll be fine. University of Phoenix.
That's a good university to have. They have really good online EA sports teams, I believe. So yeah, it's good place to go.
There you go.
EA sports teams.
Our local high school just won the state championship in EA sports competition. So all the kids that are not good at sports but good at video games were walking around saying that they are now a state champion in football because they're better at Madden than the other kids that they played against. So it's pretty incredible where we've come to these days. That's now a sanctioned sport here in the state of Georgia.
I guess that's actually a real thing then, huh?
Yeah.
Interesting.
Haven't they talked about putting it in the Olympics or something? I don't know. Maybe not.
I wouldn't be surprised. I mean, because as much as it's spread and the generations that have it and everything. So yeah, it's that, and we got bass fishing teams now that are doing pretty good. So very, very interesting times here.
All right. Well, I think we're about at the 1 hour mark. Is there anything that we want to add to close out this episode?
I think we covered a good amount of it. I know it can be confusing. So you had the email up on the screen. If somebody has questions and wants to find out more information, just email us and be glad to respond and answer those questions.
Yep. And then if you guys want to send us a message via Facebook too, we'd be happy to see what we can do to help you, at least give you some guidance in the right direction. But we're here to support you guys. We want to make sure that you get some good value, some good information. William, anything you want to close out with?
I just want to close out another great week of Cheers to Wealth. Glad to work with you guys on the daily basis. And yeah, we're moving right along here. Tax season continue to progress. We're down to home stretch now. So if we've got procrastinators out there, now's the time to get your stuff going, or just go ahead and file the extension and wait a few more months before you take action on it. But either way, we love you guys, and cheers to wealth.
Peace. Thank you, guys.